this is MXUX. I'm at the Lordstown Endurance website here, and I just wanted to go over in this pre-earnings video. This is one segment. I'm going to do several segments here, maybe more than one video. Anyway, I just want to point out a few things. We have our ratings are 554. We got a 4 rating in the rollover. So it's not all 5s, but pretty darn good. This is very interesting, and I think people are overlooking this. This is a 250 mile plus range with a 109 kilowatt battery. This is very efficient. A 109 kilowatt battery implies 218 miles of range. So they are getting, well, if I could figure it out, 218, 250, so that would be they're getting at least 32 miles more of range out of this battery than they should be. And that's because of the efficiency of the truck and the weight. I think people are overlooking this. This is a really big deal to get this kind of efficiency. And they're saying plus, which we don't know what that means. But the point is, this lowers the BOM bill of materials, really. I mean, this is a really big deal. Nobody's paying attention to this. I believe this is better than Tesla. So, and I said they're getting, 32 miles more of range out of this, and they got a plus there. In ideal conditions, who knows how much more they're going to get. But like I say, the rule of thumb is in my system, and MXUX's system is 2 miles per kilowatt hour. So this is a really big deal. People aren't talking about this. The bill of materials cost is lower. The efficiency of the vehicle is higher. And as you can see here, the charge times are really good because it's a smaller battery. It takes less time to charge. 1.5 hours on a level 3. 0.5 to 1.5 hours. 10 hours on a 110 outlet. These are staggering figures, so much better than the Ford Lightning. And I don't know what the Cybertruck is going to come out with, but I think people are not paying attention to this. They got, all this stuff. Towing capacity, 7,500 pounds with a solid rear axle. This is about the same as the present Ford F-150. Anyway, this, again, is limited for insurance reasons. The actual top speed is 130, not 80. Everybody's saying, oh, that's the worst 130 ever. You get it. Anyway, also, 8-year battery and hub motor warranty. Now, there's 8 years. The average use of a fleet pickup truck, and they're selling this to fleets, so we can imply the life of the battery and the hub motors. So we've got, the average is 24,000 miles a year. It's actually more than that. It's probably 24,500. So it's twice a normal car. But anyway, if you did 8 times that, that would be 196,000 mile warranty on the battery and the hub motors. And I have done this calculation out in other areas where I had access to a calculator. It's actually 24,000 and change. 8 years, it comes out to well over 200,000 miles. 200, 224, I think, something along that line. So, well, a 10-year would be 240,000, and then, well, anyway, you can do the math. So the point I'm making, people are overlooking this as well. So that's what that's let's say 200K, 200 miles, 200K miles. Okay. The speed, that's on the low end. It's actually more than that. So the hub motors are guaranteed for at least 200,000 miles, more than that. The top speed's 130. Tow's the same. Now, and again, these charging times and this battery, I mean, this battery efficiency here is a really big deal. And people are not paying attention to this. And we've got the price up here. So, and this is going to be a selling point for the fleets, okay, and personal users. This is not only does this make this battery more efficient, it makes the whole truck lighter and lighter efficient, physics, inertia, so forth. Also lowers charging times. Look at the charging times on the Ford Lightning. It is unmanageable. If that thing runs out of gas, I mean, you know. And this thing, again, will charge, I believe, on a 110 outlet in 10 hours, okay, because of the small battery. So, anyway, I just wanted to go over these figures. Looks like we got a 4 in the rollover, so we didn't get all 5s, but good enough. Anyway, it's a safe vehicle. It's an efficient vehicle. It's a fast vehicle, and we got 200,000. I'm going to probably try to come up with the exact figure on that later. But again, people are missing these points on the Endurance. Okay, this is MXUX. This is another pre-earnings call report by me. And I'm just going over a few things that they're probably not going to mention in the report. But this is another one of the segments I'm going to put together. I'm going to link them together for a video. Anyway, these are some factoids that give you a better perspective on the Endurance and Lordstown. The Endurance has 5,000 total parts. Total. That's low. Now, an average passenger car has about 5,000 total parts, but they like count the motor as one part. Anyway, the drivetrain has 4 moving parts. You compare this to a Tesla, you compare it to a Ford Mustang, whatever. They got reduction gears. Here's the thing I don't understand about Tesla. They went so far as to put a Kevlar blanket around the rotor of their motor to keep it from exploding because of the high RPMs, and they have reduction gearing on it. Lordstown, when you put the motors on the wheels, you don't have to do these things. Anyway, the complexity is mind-boggling. But, you know, hats off to Tesla, but I'm just saying. Their target market at Lordstown, they want 20K to 30K fleets. So they want these size fleets. So I imagine this is not Amazon or Walmart. These are utilities, or I'm not sure. I've tried to discuss this market. It's in another one of my videos. I'll probably put them into a link in the description. But this is what they're trying to do, and they're trying to do fleet replacement. You know, a lot of these trucks are, you know, Ford's fleet sales were down 26% last year. A lot of these fleets are old. The leases are up. It's a good time. Okay, their geographic target market will start with California and Texas. California has more electric vehicles than any other state, and Texas is the pickup state. I guess this is the rationale. Now, Q's Views, shout out to Q's Views, great videos on Lordstown. He was talking about service centers. Now, the original plan that everyone has forgotten about is Steve Burns's plan was to put service centers where the sales are, and then in the places where their sales aren't that heavy, they have rovers or rangers go out and do the repairs on site. So Orange County, California has a service center in it already, and I believe, or is about to. So I think we can imply from this is the ground zero market for the truck. But there has been some videos about, well, the lack of service centers. Well, you know, they're going to grow the service centers as this was Steve Burns' plan. Of course, he's not CEO anymore, but they're going to grow the service centers with the sales. So where the sales are, that's where the service centers are going to be. Okay, where sales are concentrated. Okay. Now, their plan also called for exporting the Endurance in 2022 internationally, specifically to Europe. You know, in the European Union, you know, some city centers, London, so forth, they're mandating e-vehicles only. They're much farther ahead on mandating electric vehicles, and also their local governments and municipalities, or whatever they're called there, also are mandating for EVs. So this is a market that Lordstown has planned to enter from the beginning. From the very beginning, this was, again, Steve Bird's plan. Now, you might say, well, they're in Ohio. How the hell are they going to get their trucks to Ohio? This plant is located perfectly for distribution in Canada and the United States and Europe. And the way they're going to do this is there is a rail spur right on the plant, connecting to a major railroad line. They can, I don't know if you've ever seen, I have seen car carrier railroad cars, and I've seen very long trains full of hundreds and hundreds of cars. They load these cars up on these specialized trains, and they can drive these trains to a port. You know, they can go south to New Orleans or whatever. They can go north to the Great Lakes. They're very, very close to the Great Lakes. They can be put on car carrying ships and be in Europe. So, of course, you have the cost of transportation and so forth. Of course, the Lordstown truck is lighter, so it's going to be easier to transport. But I think this is totally doable for Lordstown. And certainly Canada is a growing market for pickup trucks as well. I have down here the size and weight of the Endurance. Okay, here's the thing. You know, in Europe, the roads aren't what they are in the United States. And these heavy trucks that are, you know, outrageous amounts of weight, like the Ford Lightning and the Cybertruck and the Rivian, you know, they're not suited for the roads in Europe. And also, I would add, the sheer size of something like the Ford Lightning or the Cybertruck. I mean, they basically are not, I don't think they're going to be able to sell any Cybertrucks in Europe because it simply is not going to fit on the roads there. And the Ford Lightning could very well be the same thing. And the Rivian isn't far behind. So I think the Endurance is going to have a very good shot at penetrating the market in Europe. And again, in London, you know, they're going to mandate EVs, and the municipalities and the utilities and the postal services, they're going to have fleets of pickup trucks. And, you know, I think it's a good market. And again, you know, they can ship to Europe and sell all over Europe. Anyway, just to wrap this up, 4 million pickup trucks are sold in the USA annually. So there's plenty of market to go around, okay? I know Ford wants to sell every single pickup truck. I know the #1 pickup truck, but, you know, they have competition now. There's also, you know, 390,000 sold in Canada. The pickup trucks are becoming very big in Canada. So Anyway, I think there's plenty of market to go around. Here's, 4.5 million trucks to be sold. Okay, go figure. What you take 10% of that market is 400. What is 450,000? 5% is 250,000. 2.5% is what? 125,000. 1% is what? 75,000. Whatever. Do the math. I'm terrible at math. I used to be able to do math. Anyway, and everybody should remember, there's this $400 million line of credit, basically through stock sales, that is available to Lordstown. But their plan was worth $2 billion before they did the upgrades to it. Okay, and they have zero debt. So they can borrow. They have the ability to borrow against this plan as well. So anyway, that's just a few things that I think everybody is so tied up in all this drama. They're forgetting the essence of this truck. And I gotta hand it to Steve Burns. Laid out a pretty good, Steve Burns did a pretty good job hiring staff, and he got this together in 10 months. And that CFO, they were sacrificed, but this has been a well thought out plan, and they have a good product. And I'm going to go through some of my thoughts on how these products get killed. I'll just give you a preview. It's so hard to start an EV manufacturing company in the United States. Look at what happened to Tesla. Okay, China has 300 companies making EVs. Okay, manufacturers. It's not hard. The United States makes it hard. All right. This is MXUX. This is another segment on the Lordstown pre-earning call report I'm doing. I want to talk about the Workhorse sale of the stock. I think they sold 70%. And now, they had quite a bit of stock. They kept 30%. It's not like they're out of the money in the stock. But the thing is that I think the sale was a mistake personally. But the point is, the question is, was it the new CEO that was just installed or prior CEO who made the decision? I think that's important. I think if it was the prior CEO, I think he would have had more inside information, more insight to what was going on, although he was only CEO for a couple of years, and he may have thought that it was time to raise capital. I don't know. And if it was the new CEO, it's a different story. I think, the timing of this can only be seen in one way. It's purposeful to damage the LMC pre-call. It's you can't look at it any other way. If they wanted to raise capital, they could have done it previously, and or they could have waited till post-call, or not sold at all, which I think, since the cost to them is zero, I don't see why selling before the launch of the truck would make sense. Yeah, it's purposeful to damage LMC. So, it makes you wonder what's going on over there. Why they would do this. And again, I think I'm going to just say, I'm thinking it might be the new CEO trying to make his mark, doing a big move first thing to, show where he's coming from. And by the way, they're distancing themselves from Steve Burns, who invented all their tech, the trucks, and especially their main asset, which is the workhorse drone and truck mount. They have patents not only on the workhorse drone, the software, also the truck the drone is mounted on. So, competitors can't even make a truck with the same system with, minor changes. Workhorse owns this whole space. They scooped Amazon on it. It is the only rational way to do drone delivery in residential areas. Amazon spent $1 billion on this and totally failed, and they just closed down their program totally. When they could have just gone with Workhorse and bought the zone-based delivery trucks, but no, because Bezos, I think Bezos was fired. I did a video on this. You can look at the Zooks video of mine, and I go over what I think. I think he was fired. He spent $1 billion on Zooks. Anyway, so if it's the new CEO, he's trying to make a statement. Anyway, I think it's looking at the history. Of course, this is business, not history. So anything is fair in business. They can do whatever they want. But I think this was purposeful to damage Lordstown. I'm just gonna, I used to be a recruiter way back in the day, but my thoughts are not positive on the new CEO, and I know he hasn't done anything yet with Lordstown. I think that, and this may be their intention, they're moving from an entrepreneurial to a management class. So, Steve Burns to this transitional CEO to this guy, who's definitely management class. He's from, he's last worked at a big company, and, this is, very far from being an entrepreneur. He's a West Point military guy, and my experience, and I don't want to demean anybody or anything, if you're not working with the federal government, specifically the military, I don't believe West Point is an advantage. I think it could be a disadvantage because of some of the personal traits and some of the management traits, especially in an entrepreneurial company. But anyway, that's just my personal opinion. If you have government involved, but specifically military contracts involved, who knows, maybe Workhorse does, then it's a big plus. But other than that, I don't think. And I'm just gonna, I did a bit of work on this. I was gonna go over this in more detail, but just basically, the thing is, this candidate who's placed as CEO, it looks very impressive, but and he he took over this company as CEO early in his career and everything. Turns out that his father had established the company, and he just took over when his father passed away. So, not exactly an entrepreneur, or like I say, the myth of the self-made man. Steve Jobs had what's his name? Everybody has somebody. Tesla, Elon Musk, the first guys at Tesla, they developed the whole battery technology before Musk got there. I mean, they figured out the cooling, the charging, the array, how to get it not to blow up or burn down. All that was done. Anyway, let me go on. So anyway, I don't know if maybe the company has changed and he is a fit now for the company. or their aspirations have changed. But I wouldn't see him as a fit if I were recruiting him and what I went through his background. Perhaps he's the right person if Workhorse wants to be acquired, because that's what he is seems to be good at, is or that's what he was involved in. I think selling Workhorse before this drone idea is approved by the FAA would deny value to the stockholders, and it would give all that value to the company they took over. I think it would be a screw job. I think it would screw the shareholders, because they have these patents, and all they need is FAA approval. They basically could get this thing up and running. I mean, Steve Burns, visionary. He knew exactly what to do. Anyway, everybody's dogging on Steve Burns, but I think with once that drone system is approved, or drone delivery in general is approved by the FAA, it's going to be a catalyst for a big change in the stock price. And maybe this guy is what's needed in a post-postal deal. That may be behind the sale of Ride stock, okay? Ride is enemy number one of Ford, the darling of the political class. So this guy's a step away from the political class, and if you want to garner favor with the political class right now, you want to, Ride is bad boy number one. Okay. Anyway, wait and see. And I have down here, I'm going to hold Workhorse. I wouldn't buy on this news. And anyway, I am quite disappointed by this. I would love to know who made this decision. Anyway, but that's why Lordstown is tough. Because this stuff rolls off our back. Fear is for others. This is MXUX. This is another segment of this pre-earnings call for Lordstown Motors. I just want to go over my theory of why starting an EV company is hard in the USA. I have down here, it can be easy. China has 500 EV manufacturers. USA has one, Tesla. If it's so hard to do, why does China have 500 of them? Are they smarter than us? No. They don't have the class structure we have, and they don't have the motivation to protect a legacy industry or legacy industry, since their economy is so new. Let me just go through this. My theory based on the Tesla model. So, in the early days, this is in the United States, you have the entrepreneurial class. They're under the radar. These are the guys that were doing Tesla before Elon Musk got involved. They are innovating. They are making leaps and bounds, changing everything under the radar. It's so new. It's the new. Nobody even understands what they're doing. I think this could be a good parameter for investing in startups. Okay? If nobody knows what the hell they're doing, and Nuvve might be one of the examples of this, maybe that's a good thing to invest in. I'm not a financial advisor. I'm not telling you to invest in that company. So they're in stealth mode, okay? And as soon as they move out of all the prototypes and everything and get into pre-production, which is where Tesla was, when this happened, before the Model 3 especially, and where Lordstown is now, The managerial class in the United States takes notice. Okay? And I'm not talking about the upper out of sight wealthy. They have the managerial class working for them. Okay? Anyway, they've been scooped. Okay? They know it. Okay? All these consultants or whatever. Okay? The executives and anyway, they have been scooped. They know it. They're threatened. They are not as smart, and they know it. They're not as smart. That's why they're in the managerial class. You know, if they were really smart, they'd be in the entrepreneurial class. Okay? Elon Musk, really good example of this. Steve Burns, in my opinion, another really good example of this. So, operationally defined, this managerial class is not as smart as the entrepreneurial class. Okay, so soon as they get scooped, and they get scooped, they're threatened. And they know they're not as smart, you know. They know it. That's why they feel threatened, because they know, hey, you know, suddenly light bulb moment. Okay, so then it turns into it doesn't say that. They don't go, oh well, we got to do the same thing, you know, Ford, especially GM, all these other ones. They don't jump on the bandwagon and say we got to catch up to. They say we got to preserve the status quo, the wealth and the products and the markets we have. We got to kill this innovation. Okay, so the managerial class lacks smarts. But the one thing they have, they got interlocking boards of directors or whatever. They got the country club. They got, you know, the Bohemian Grove or whatever you want to talk. They have contacts and power to wield. That's what they have. Okay? So they're kind of street smart. They're not smart. They're not book smart. They're not entrepreneurial smart, but they're, you know, street smart, class system. They know how to preserve their class. Okay, so the first thing they do is the financial press and old Wall Street. They motivate, and if you don't believe I did the anatomy of a short, you can look at that video. My goodness, how this is all coordinated. It is shocking. You know, before Wolf Research gave the $1 rating on Lordstown, the CEO from Ford met at a private gathering of their executives at a golf course with him. The point is, you got the shorts, okay? Okay, and then you got Jim Cramer, who, you know, anybody that wants to can find the information on Jim Cramer. He has there are videos of him on YouTube talking about how he has manipulated stocks. This is in the past. He says, this is my past. I don't do this anymore. He talks about how the hedge funds, you know, they manipulate stock prices, cause stock prices to drop, run them up, short, you know. This is all inside baseball. I think somebody got him a little drunk or a little something. Anyway, you can find these if you look for them. They're old. They're like shot on VHS video. Then you have the Wall Street Journal, which is just a mouthpiece for this class. You know, they announced, you know, before the 4th of July about the investigation on Lordstown to take the stock price down. So stock manipulation, that's what these guys are about. They're inflicting financial pain, okay? And they are testing the early investors. They want them out. They want to stop this, okay? This is, you know, to them, vermin, you know? This company cannot stand, you know. And then, now after they go through the financial press and all this business, and believe me, this is all coordinated, and you're naive if you don't think it is. Then the final step is political power. And this is also coordinated. And you look at the recent meeting, Biden's meeting on EVs. Perfect example. We got this United Nations global warming, no turning back, red red flag warning, right? We got to get in EVs. He has the EV meeting at the White House. Who's the invite? Ford and General Motors. You know, Tesla, no. Lordstown, no. Okay? This is coordinated. This is on purpose. This is not accidental. Okay? This is the managerial class pushing their political power into the situation. And then you got the judicial system, or, whatever you want to call it. It's still political power. Then the SEC starts investigating. They get Elon Musk to step down as board of directors. They stop him from tweeting. They investigate Steve Burns because, Jim Cramer tripped him up on an interview, and then went and did his whole, the mendacity of Steve Burns, his whole act. I mean, this guy should get an Oscar. What a phony. Anyway, then, the SEC starts investigating, right? You know what I mean? And then after that, the Department of Justice gets involved, all right? Because, they got to get involved because the political machine is moving in to destroy this innovation, okay? And you can see this with the crypto right now, okay, with this new bill, how they're moving in again to destroy. They're going to destroy crypto, and they're going to take it over. And they're going to have their own crypto, okay? So this happens with innovation in America over and over again. And it's really you can draw what you want from this. And by the way, all of this, the shorts, the DOJ, the SEC, this is an investigation looking for anything they can use. Facts are not an issue. This is a search and destroy mission. Okay? Period. So you can look at Tucker, the movie Tucker. I mean, there's a lot of different things. But anyway, this is a gauntlet that kills innovation in the United States. This is why China's going to be selling $25,000 EVs all over the world. They're going to they're going to take over the entire industry. Anyway, I boil it down to this, and that's my 2 cents. So deal with it take this as a grain of salt, my opinion. All right, let me move on to the next section here. This is MXUX. I'm going to wrap this up with this. I just want to explain this, and I'm going to read these disclaimers. This is the back of the napkin numbers, okay? This is something I do. It doesn't follow any conventions. The idea is just to get some kind of grasp on what's going on with the company when you don't have complete information. And right now we have kind of incomplete information. Of course, we don't have the earnings report, and then, we have sales numbers and so forth that are missing, and we don't know all the costs and the depreciations that are going to come out in the report. And to be honest with you, I am bored of this kind of stuff, so I don't for it. But anyway, I'm not a financial advisor. This is the roughest of rough estimates to make any decisions based on this data. Do your own DD, okay? Please. This is just somewhere to hang your hat, maybe. Okay. These are some rough calculations I do for myself to try to get a grip on a company. Some are better than others. Really just a hint of what might happen, but better than nothing in my opinion. This is based on estimates and incomplete information. Do not rely on this. And this is dated August 10, 20. Don't make any decisions on this. Okay, this is pre-earnings report. And this is, like I say, this is just something I do to kind of wrap my head around what's going on with the company. Anyway, not accounting, not GAAP, not corporate. Anyway, I'm just going to go through the data. You guys, I know there's probably errors in all this. You can comment and make fun of me. I used to know how to do math. Anyway, okay, let's get started. Right now, pre-report, and this is, I'm going with the numbers, this first set of numbers. I'm putting both 21 and 22 together. So I'm calling this the start of production back in Napkin. And this takes into account, you know, basically everything we know right now. So let's say year to date. Okay, this is probably going to be accurate year to date or some such thing. So anyway, this is both 21 and 22 production together. All right, I have down here 30,000 deposit confirmed sales. Could have more, could have less. That's what I have, 30,000. The price of the Endurance is 55,000. Okay. That gross is 1,650,000,000. Is this earnings before interest, depreciation, taxes, and I don't know. This is a gross number. This is the number I'm going to use. You guys figure it out for yourself. Okay, but that'll give you a rough idea. 1 billion, and that represents 5% of the plant capacity. So, you know, we can do what? A lot more. Okay, the billions and billions. Is what's his name used to say. All right, now we're going to move on. Now the truck costs 55. I have bill of materials, which is the cost of the parts that go into the truck. I don't know if this includes labor. This is, again, a rough estimation, and this is a rough number I came up with, but I'm going with it, and I can tell you that that gives you 18,000 margin per truck, per unit, okay? Which is a good margin. And, you know, the clients are going to get 7,500, so they're going to get this truck for 47 plus state and local, maybe 45K, okay? Anyway, now I have down here, asterisk, before delivery, marketing, cap, okay, this is before, you know, these things that I can't calculate. Anyway, I'm too lazy to calculate, or they're not available, I don't know. But anyway, I'm saying the bill of materials is 37, so we got 18,000 margin per truck. So we got, this is supposed to be 30,000. Okay, that's an error. Sorry. Times 18,000. That's 540 million. I'm going to call it net revenue. I don't even know if that's the right term. Again, before cost of goods sold, marketing, delivery, who knows what. This is back of the napkin, okay? So 540 million net revenue, okay? We got 540 million in earnings or net revenue, or we're going to call it earnings for this purpose. And we're going to divide that by 176 million shares, which is what we know the shares outstanding right now. There may be more. We get a earnings per share of the total production based on the present prices and shares outstanding of 306, which, you know, I like it. 583 is the present price as of today of the stock. And over this period, we got our earnings per share. We calculated back of the napkin of 306. That gives us a PE of 1.9. Okay. And the average PE is 13 to 15. And you know, Tesla's PE is, you know, I don't know, multiple hundreds. 1.9. Take a look at that number. PE. I'm not going to give any advice on that. Okay. So we got, this is the gross. So we got revenue per share of 881 and for 21 and 22. Okay. And that's with my back of the napkin, just to give you an idea. Now, if we break that down, and again, this isn't following any special rules. This is breaking all kind of rules. And this all does. But we can break this down into 21 and 22. So in 21, we're expecting 1,000 units, which we may or may not get. But we got 1,000 units at 18,000 margin over 176. So the revenue per share in 2021 is $1.02. Okay, so that's $1.02. Anyway, in 2022, there's 29,000 units, 18,000 a margin per truck, 176,000 shares. Anyway, revenue per share of 2.96. And that is now I don't even know if I did this right, but that's a 290% increase in revenue from 21 to 22. Okay. So let's just peruse this 1 second here. Again, read these disclaimers. I ain't kidding. Okay. I do this. This is my twisted, atrophied brain. Don't pay attention to me. Do not rely on it. 1 billion in gross, 1,650,000,000 gross at 5% of plant capacity. Okay, so you can do 95% more than that. We got an 18,000 margin per truck, and this is my figure, and it doesn't include a lot of stuff, but I'm sticking with it. And my bill of materials is 37,000. I think that's pretty close. I don't think that includes labor. I don't know. But anyway, it's back of the napkin. The net revenue for 21 and 22 is 540 million. The earnings per share is 306. The PE is 1.95. And the 2021 revenue per share is $1.02. 22 is 2.96. Okay, so what we got here is, I guess what I'm trying to say is, and this is not advice, if all the stars align and this starts going, and there's, you know, better than a 50% chance, I think that it will. We're looking at a good margin. We're looking at earnings per share of $3, a PE of 1.9, revenue per share of almost $9, and we got growth of 300% in revenue per share. I don't know what this earnings call is going to be about. We do have a line of credit. You know, could this happen? Is this all aspirational? At this point, it is. But this kind of gives you somewhere to hang your hat. And just in closing here, just the recent gift of stock that Burns got actually before he was fired or left. Burns owns 26% of Lordstown Motors, plus what he held before. He likely, I bet he owns 30% or more of this company. So bully to him. He's going to get rewarded if everything works out. And just by way of comparison, the Tesla sales revenue in 2020 was $31 billion. It's 93% larger. So you can see Lordstown Motors is a small fish, but here's the thing. They had 93% larger sales. Guess what? We got 95% of capacity to go. So anyway, that's my take on it. Guys, do not pay attention to this. You can go through this and pause this video and look at these numbers and tell me what you think in the video, and see what, do your own back of napkin. Tell me what you come up with. PE, I'll tell you what, everything, well, anything, anyway. That's my take. This is if the stars align and everything happens. Bully. Hi, this is MXUX. I just want to close this out and say, I am not a I am not a financial advisor. This is not financial advice. I have no idea what's going to happen in the earnings call. I'm looking for good news, or just flat news would be good news. I hope you like the video. Do not act on any of my financial analysis. Do your own financial analysis, please. And will you throw a like and a subscribe on there? I hate asking for a like and a subscribe, but if you found it useful, like and subscribe. And you know, I'm interested if you have any comments on the math. It's like a chimp doing math. Okay, thanks everybody.